Dean Marie, and I am so privileged to be joined by Matt Nye. He was with us a few weeks ago and was talking about financial tactics and strategies that we could really carry into our professional lives and also our personal lives. There's so many golden nuggets that I would highly recommend you returning back to that episode. I'll be sure to drop the link here after. And in the meantime, today we are going to be talking about end of year tax strategies for businesses. He has saved many businesses, countless thousands, millions of dollars, I'm sure, if you add it all up total.
Mhm.
Matt, thank you so much for being here today. You're such an expert in this space, and it's such a privilege to have you.
Sure. Yeah, I appreciate the opportunity. Glad to be here. Thank you.
Yeah, Matt, this is, we've got 2 weeks left, and like actually literally 2 weeks left. I think it's Christmas next Wednesday, and then the Wednesday following is New Year's Day. Am I right on that?
Here's well, yeah, today's the 17th, so yeah, exactly 14 days left in the year. So 2 weeks
Exactly
is it.
14 days left in the year. Obviously, we're heading down to the wire, and it's like that awful time ticking down to April 15th, and the 15th for people both on the professional and personal side, where you're like, oh shoot, taxes. And I want people to, even though we've got the holidays throughout this time, I really want them to end the year well, whether it's by
Mhm.
making intentional donations or spending their money in a smart way so that they don't have to give it all away, or putting it into a place where it really can be preserved and grow. So, what are 3 to 5 tax strategies that folks can really implement themselves, and or questions they should ask their bookkeeper CPAs before the end of the year?
Yeah, so first, let's zoom out just for a second and say I'll make the qualifying statement. If by this point in the year you haven't done some sort of holistic tax planning, you are definitely behind the 8 ball, and a lot of the really cool things that you could have done, the window has passed, so to speak. The good news is there are several of those strategies that you could execute for next year. So now, like, it's a good time to talk about these things. There are still a lot of things you can do before the end of the year, but some of the really dramatic ones require some planning, right? And uh, some additional what they call material participation from the IRS, which involves time. And obviously, with 2 weeks left in the year, if you have a material participation requirement of 100 hours, for example, you're not going to get that done this year. So, always a good idea. First thing I would say, just again in general, is in this is not a bash on CPAs, although it comes off that way. But as a general rule of thumb, CPAs are focused on compliance, right? They tend to look backwards. They're typically not looking forward from a proactive tax planning standpoint. So the first thing you need to recognize is, if you're working with a bookkeeper or a CPA and the routine is basically, yeah, we got all your stuff from last year, we uploaded it to the software, we made some tweaks, and here's the new return. Odds are pretty good you're missing out on, strategies and savings opportunities, because again, that's the sort of thing that should be looked at least a few times throughout the year to identify where there are opportunities. So the clients that I work with, the partners that I have, specialize in that, holistic, proactive tax planning, as opposed to a, rear view mirror type approach. So having said all that, again, check with your bookkeeper, your CPA. Uh, Hopefully you can have those conversations earlier in the year. But having said all that, even at the end of the year now, you have several different things you can do. And I guess we'll start with the obvious ones, which would be if you have a business and you have control over uh, your invoicing, your cash flow. The easy one would be uh, push out the some of your invoices. Like if you think you're going to have a high, taxable income this year, you could push off the collection of some of that money into the new year, right, to help mitigate your income for this year. So that's something just from a business standpoint that you could do very easily. We have lots of opportunities. I made a list here, and I actually created a special blog post just for our episode here.
Ooh.
So The other one is easy peasy, and this is very common. One of the reasons when you're in California, you see a lot of people driving G wagons is they're taking advantage of the depreciation on some of this heavy equipment, like the trucks. The heavy trucks are considered uh, they get extra depreciation basically. So typical CPA will tell you buy as much stuff as you can at the end of the year. And right now you get 100% depreciation essentially. So uh, you can buy something. The cool thing is you can finance it, right? So let's say you're out of pocket for the 10% down payment, but you get to depreciate the entire value of the vehicle, right? Of the truck or whatever it is. So as an example, you could do, uh, let's not use a vehicle. Let's say it's like an excavator. If you were a construction company or something, you buy a $300,000 excavator, you put $30,000 down, you finance the balance of 270, you get to write off the entire 300 this year. So if you're in a 37% bracket, you're talking, $111,000 in tax savings from a $30,000 cash outlay, right? So very, very effective use of cash, right? That counts towards business equipment, including machinery, computers, tools, any vehicles over 6,000 pounds, office furnitures and fixtures, anything like that. So that's typically why you see businesses at the end of the year go on the office spending spree, if you will, office improvement.
Good.
Let's see
And with that, what about the stay-at-home entrepreneurs, where their office is literally in their home? What are the stipulations there?
You can. So yeah, and I should have qualified at the beginning, right? I'm not a CPA. I work with CPAs. So like take all of my advice. You'll want to validate that with your own bookkeeper or CPA. But essentially you can write off if you measure out the square footage of the room or rooms that are in the house. I want to say there's a cap, it can't exceed a certain percentage of your total living area. But essentially, yeah, you can deduct almost all of your home office expenses. I don't think you can do my recollection is you can't do cell phones, you can't do internet if you're using those for personal. They really skew for the home expenses. Like if you're touching it at all for personal, then you don't want to try
Right.
to write that off. But for the most part, now they extended the Tax Cuts and Job Act in the one big beautiful bill, right? So you've got the standard deductions now, which you know most people are fine just taking the standard deductions. Like it's almost not worth trying to itemize that type of stuff out because of the way they've done the standard deductions. So, yeah. All right. And then let's see, what else did I have on my list here? So we had, depending on what you've got going on for retirement plan contributions. So like if you have a solo 401k, you've got until the end of the year to contribute to that. The limits are
Mhm.
23,000 for 2025 if you're under 50, because of 30,500 if you're over 50. That's a deferral. Solo 401k employer contributions, you can go up to 69,000. They have what they call the SEP IRAs. You can go up to a max of 69,000 on those. So it just depends on what you've got in place. If
And
you don't
Matt,
have,
oh, go ahead. Sorry.
well, I was just gonna say, yeah, if you don't have something like a solo 401k set up, you would have to put it in place before the end of the year to make the deferrals for this year. The SEP IRAs can be established and funded up until you actually file your return. So you would have into the next year to do that.
Okay.
Those are, and then another one that I'm a huge fan of is just an HSA. Like you can set up a
Hmm.
health savings account. Like everybody should have one of those. I think the limit is like $6,700 or something
And
per
Matt,
year.
that's in addition to, even if you have health insurance, get a health savings account because that can cover your deductible.
Yep, exactly. So yeah, they're great. And then we do, again, I mentioned it on the last call, the the strategies that we used using the cash value life insurance, a lot of times those products will have a living benefit component too. When I'm now we're kind of segueing into health insurance, but there are advantages to those cash value life strategies where you can get, living benefits, or you build the cash value and you just borrow against it to pay whatever your medical bills are, right? So from a long-term care perspective, there are angles there. Um, let's see, what else do we have on the list? We can obviously prepay expenses. So I know this is a big push from the Driven folks, right? Sign up for Driven before the end of the year and get to write that expense off. The rule on the
And
expense. Go ahead.
And just a quick note for those who don't know, Driven's a mastermind. So any kind of professional membership,
Mhm.
even honestly, high ticket software that you've been kind of putting off purchasing, that's a good one too.
Yeah, and so the rule, just so everybody is aware, is they have to have a benefit of 12 months, but they can't extend beyond the next tax year, right? So obviously, if you signed up for Driven and you wrote that big check, it would expire in actually, you know what? They were doing some sort of bonus that actually might be, they were extending at the last meeting that I was at. They offered some sort of extension where it was kind of like sign up now, and instead of 12 months, you get the extra quarterly, which that would actually, I think, break that. It would break the rule because the benefit would go out into the 2027 tax year. So food for thought there.
Yeah.
Um, you can do, again, this would be business related, right? If you're a business, you can do the year end bonuses. Um, there are, rules there, but basically essentially you've got to pay it out before the end of the year, right? It's got to be paid, not like, hey, Christine Marie, I owe you this bonus. It's the money is out of my account, out of the business account and into yours. So that's an easy one. Again, a lot more levers you can pull as a business, right? In terms of the write-offs and things. And then hopefully one that our folks out there don't have too much trouble with, but obviously you want to write off any bad debt, right? So identify your uncollectible accounts, write them off before the end of the year. It has to be a bona fide debt that's become truly worthless, and you have to be able to show that you tried to collect, right? Um, Another one, very, very popular. We actually had, I think, one that the deadline was just the other day, but there are lots of charitable contribution strategies, right?
Mhm.
So you can do these, they call them donor advised funds. They have basically the one that I'm thinking of specifically that was so powerful was what they called a leveraged charitable contribution, where you're essentially financing, similar to what I mentioned earlier, you're basically financing a charitable gift. And so you get 100% of the write off, but you're only out of pocket, a certain amount for the gift.
Interesting.
Yeah.
I've never heard of that.
Yep. It's like
So
I
with
want to say it's 5 to 1. It's either a 4 to 1 or a 5. I think it was a 4 to 1 write off. So basically, for every dollar that you're out of pocket, you get to write off four. And again, that
Wow.
one, the deadline was just a couple of days ago. So, like I say, I'm going to talk about here in a second the really cool ones, and they require the material participation, which is why it's basically
Mhm.
to do those. Let's see what else. Oh, the one qualification on the charitable contribution is typically you're limited to 60% of your adjusted gross income, right? So it only applies to 60% of your gross income. You don't get 100% write off on those. Let's see, what else do we have that's worth talking about? Oh, always a good time at the end of the year just to review your entity structure, make sure that that still makes sense.
Mm.
There's a lot of things you can do when it comes to self-employment tax and things like that, just by changing your entity structure. And the goal of all this, of course, is to get your effective tax rate as low as you possibly can, right? So we're trying to move down those brackets and make your effective tax rate as low as possible. Let's see. So you want to pivot
That's
to
a
the. Go ahead.
That's really helpful. I've never I've never thought of it in that vein, Matt. What would be a good resource for folks to lean into in that regard? Like if honestly, should you remain whatever entity you are, what are some helpful resources that they can look into?
So if you go to the one partner that I work with is called Excel Empire. If you go to excelempire.com, the lead attorney there is a guy named Ed Lyon. He's got some articles on that in the insights section.
Okay.
And he maps out basically, what you should be looking at. But essentially the entity restructure typically revolves around how much you're paying in the self-employment tax, and you're
Mm,
able to shift, like I say, the liability over, so it's at a lower effective tax rate. Um,
great.
so that would be one place you could go. I've
Okay.
got some stuff I'm actually working on. It's funny since I don't know if I mentioned on the last one I was having issues with my website. I had WordPress and I had a malware infection and it's all
Oh,
in chaos. So I've completely rebuilt my website since our last
nice.
meeting, and I actually have a calculator I'm working on several calculators, but one of them is basically that I call it tax alpha, but it's basically how to get your effective tax rate as low as possible.
Nice.
And then I'm working on some AI functionality too, right? Where you can plug in all of your scenario, and then it will give you like, here are the different strategies that you can execute. So
Wonderful. Good. And what's the name of your website, Matt?
just infinitewealthbuilder.com.
Okay. Perfect.
And that's got all the I've got deep dives on a lot of these things that we're talking about here, but mostly I'm trying to do the calculators, right? Because that's what everybody
Yeah.
wants to see. It's like, what's the dollars and cents, right? So
Right. And I just went to your website and it looks amazing. Do you actually have bandwidth if someone was to schedule a strategy session with you before the end of the year?
yeah, so it's a maybe, right? It just depends
Yeah.
on what they've got going on. I can tell you all of the CPAs that I work with, they stop taking, new, like if it's something where we can just look and say, okay, yeah, this is a fit and it's this strategy, and kind of drop the, round peg and round hole, yes.
Yeah.
But if it's a, deep dive on their books, no, like it's
Mm,
just too late in the
yeah.
year. But
It's too late.
one of the offers that we have is um, it's kind of like a cross between bookkeeping and tax planning. So
Mm,
typically, the way we would work for the holistic tax planning is we would quote a fee, right? We would do a discovery session, we would get the tax returns, we would go through it, and we would say, okay, Mr. Client, we can save you $300,000 in taxes, and the fee is going to be X, right? And then
mhm.
they decide if they want to move forward, and away we go. Now
Right.
we've got an offer where for a monthly fee, it's kind of like bookkeeping on steroids. So you get
Mm,
the basic bookkeeping done. And I didn't finish my thought. On the tax planning. A lot of times what we find is the books are not great. And so even when we do the tax plan, it's like, oh, we really need to, revisit your books and get these things cleaned up. And so for that
right.
reason, we created a bookkeeping service that has more of a tax strategy, like a high level. It's not a concrete, super
Oh,
detailed
wow.
plan, but then it's also got a quarterly fractional CFO call as well. And
Wow,
so,
Matt, that's great.
yeah, yeah. And so what we're finding is we've already had several, really great successes where, just because our bookkeepers are going through, getting the person ported over, doing just the basic nuts and bolts of the setup, because our
Mm,
bookkeepers know all of our strategies, they're immediately like, hey, you could save, $30,000 a year just over here, right? And so they feed that
wow.
back to the relationship manager. And we started that, I want to say, back in February, and it's going very, very well. And we have
Yeah.
clients that uh, that are pretty large, like from a
Mm,
gross revenue standpoint. We've got guys doing $10-20 million a year, where we're
mhm.
doing the bookkeeping for them. So
That's great.
There's
And honestly, Matt, the communication, it's like sales and marketing should never be isolated. It's the same thing with bookkeeping and your
you
CFO
got it.
or CPA. It's like, my gosh, usually they're not talking.
So I think the stats, and I'm going to get one of these wrong, but I know the first one is 93% of business owners overpay, right? That was a survey done in Forbes. It's probably been 7 or 8 years ago. So
Wow.
essentially, almost every business owner overpays. But the other one is, I think it's either 21 or 23% of those people overpaying are overpaying because their books are a mess. So it's a bookkeep. So, and I talk to people all the time where they're like, "Oh, well, I got VAs or whatever doing my books for 200 or $300 a month, right?
Yeah.
How much are you potentially overpaying taxes, right?
Right.
Because of that." So yeah, it's one of those things where it really is the foundation. Good books are the foundation
Mm.
um, to make your tax life easier. So
Well, and Matt, I don't want to derail you in going through your list. So why don't I've got a question about this because this is so important and really it requires intentionality at the beginning of the year rather
yep,
than this is better than nothing having this conversation 14 days out before the close of the year. But man, how do we get prepared for next year? So before we do that, let's finish up with the tax strategies that you prepared for us because they're so good. There's such an action. They're so actionable and they're immediate. There's things we can do literally today through before Christmas. So finish your list, and then I want to talk about as we look ahead to 2026. What should we do in January?
yeah, I think well, the where I was getting ready to pivot to the ones that require material participation, but those are also the
Mm,
ones where you actually get a refund, right? So they basically, I'm sure everybody's heard of solar credits, and the concept is what everybody thinks of when they hear that are solar credits for cars and things like that. With the changes in the one big beautiful bill, they pivoted to more of like a renewable energy. It's not just about solar, and there are uh, some strategies where they basically go back and look at your return, like how much have you paid in the last 3 years? And the minimums for this to make sense are essentially $210,000 in federal taxes paid across the last 3 years. So an average, you would have to pay an average of 70,000 a year for the last 3 years. But what it enables us to do is basically go back and recapture. You can actually get a refund on that. It involves setting up, we call it basically a business in a box, right? You're going to create a
wow.
business, you're going to have a stake in a renewable energy type venture. But because of the way the laws are written with the credits and the refunds, you end up coming out. You're you're buying in for a certain amount, which is coming. So you have a down payment, but that's basically coming from the taxes you've already paid. And then the vendor is financing the balance. And so you're essentially out of pocket nothing, and you're
Wow.
able to yeah, we've got guys that are literally getting refunds of 200, 300, $500,000. And
Wow.
so so much so that uh, we had kind of a mad rush towards the end of the year. And because that one does require the 100 hours of material participation,
Mm,
and the vendor that we work with that actually does the deployment of the physical project, they actually had to create multiple extra basically training sessions, if you will, to accommodate all the people that needed the material participation. So
wow.
those are the biggies. They most of them all work around the same core concept, right? Which is
Right.
you're taking advantage of the depreciation. In this case, you're taking advantage of the depreciation plus the credits that the government set aside for the renewable stuff.
Mm,
Um, so, and that's what I say. Other than the time, like if we had talked about this 2 or 3 months ago, then you could have
right.
still gotten your 100 hours in before the end of the year, right? But,
Well, and is
so
that something that you can only do retroactively? Like you can pretty much only do in October or, end of Q3?
no,
Or is
we've
it
got
something you can
So no, that's what I mean. I would encourage people to go through that exercise now,
yeah.
because that way we can go ahead and get everything lined up, generate the proposal, all of that. and then they've got the whole next year to do the material
Mhm.
participation, right?
Good. Good.
So yeah, and that's again, like we were talking about earlier, right? The problem with this stuff is nobody wants to think about taxes, right? I mean,
Mm,
that's like the last thing you want to do. And so just the tendency is to put it off until the last minute, either April 15th or like you say, December 31st. And then you don't think about it the rest of the year. And so
yes.
just a little bit of a little tiny bit of proactivity can just save so much money and heartache, especially, heartache with the bookkeeping. Um,
Yeah.
you know, it's money well spent. So yeah.
Right. So good. So really, Matt, as they're thinking about January, that aspect with material participation and how you described that earlier is effectively it can take multiple hours with working with the
Yeah.
IRS. You need participation from somebody else and it requires multiple hours. So
Yep.
therefore we can't do it. We're out of time this year,
Right.
right here,
Well,
right
and
now.
that's what I mean. And the vendor, yeah. So to meet the material participation requirements, the one vendor that I'm thinking of, they actually have essentially like a class, right? You go
Hmm.
to the class to learn how the business that you're buying essentially operates, and that's like it's part
Hmm.
of, that's how you meet the material participation requirement. And there's not enough time left in the end of the year
Right.
to have a hundred
To
hour
do
class.
that.
So yeah.
What else should folks be doing as we are looking towards January? You were saying have those regular meetings with your CPA and bookkeeper throughout the year. I know that unless people have it regularly and routinely on their calendars, it's there's a lot of folks, I've been guilty of this at various points in my business where I'll only meet with my CPA
Mhm.
when it's time to file taxes. But I'm meeting with my bookkeeper outside of that on a regular basis. So, what are best practices to really stay on top of your books for
I
2026 people can implement?
I mean, exactly what you just said, right? Just hopefully you've got a bookkeeper that's got uh, a rigorous closing. You've got a close of books right at the end of the month. I
Mhm.
know one of our fellow mastermind members. I want to say he says he tries to get everything for his clients closed out within 5 or 6 days. Basically of the end
Mm,
of the month. So timely monthly closings. It just goes back to attention. I don't know that there's any secret, recipe other
yeah,
than the discipline of looking at that.
yeah,
And again, I know from the clients that we've had experience with the bookkeeper, that's not their thing, right? We've got
right.
tremendously successful guys who the last thing they want to do is be looking at their books. So as long as somebody
Mhm.
is looking at it and there's some sort of conversation happening there, again, you can look at the going back to the cash value life strategies, right? What do you have on the books? Like, can
Yeah.
you put in place some of these strategies where you're going to reward your employees and get a tax benefit by doing
Mhm.
so? Things like that. But
It's good. I
yeah,
like that aspect. A mutual colleague of ours, Qasim, he has, with his CPA and bookkeeper, he has a ongoing just daily spreadsheet of all his accounts in one place.
yes,
And
yeah,
on a daily basis, they're updating it and he can just go into that spreadsheet. It's bookmarked. It's
yeah.
really simple. And
Mhm.
effectively, at any point, he can see his net worth, like with the snap of his
Yeah,
fingers.
yeah, it's great.
Another
Yeah,
thing so easy, and it's really I really like that it's so accessible. It's just in a spreadsheet. We all know how to, and it's a spreadsheet without all these uh tables and graphs. It's
mhm,
literally just like, here's this one business, here's the valuation, here's your bank accounts, here's how much money's in there, here's your credit
sure.
cards, here's how much you owe. It's so simple. And then another practice, this is the most simple, and it's something that so many of us fail to do, going through our credit card statements on a regular
Oh,
basis, because
oh, that's a great one, yeah.
because
So
honestly, I have random little subscriptions that are $20 that I'm like, wait, why did we just pay Descript? So it's actually helpful. There's a radical responsibility that's that's required to do this. And Matt, too, I actually think that it's a reframe around money, because once you've surpassed a threshold of making a certain amount, I actually think we can diminish our value of the little dollars, which
Yep.
is really, man, that's so unhealthy to have that mindset. And actually, since we already mentioned Qasim, he actually has such a value of every dollar he spends because of how he grew up. He grew up as, what does he say? A child of a single blind mother in Albuquerque, New Mexico. And so he really had to make his way. And I think that he has a value of money that probably a lot of us who didn't grow up really wondering where your next meal was coming from. So it's easy to spend the little dollars and be like, oh, that's annoying, I'll get to that later. So there's a value of every dollar that we need to take back and kind of reclaim,
Yep.
and then take action accordingly.
So that ties in perfectly to the conversation we had last time about compounding, right?
Mm,
And what you don't realize, some of the most successful guys I know, they are very anti-subscription, right? Because
mm,
like one of them in particular, I have to like really explain, like if I propose like, hey, I think you should do this and it's a subscription fee, I have to really show the ROI, because in his mind, he's looking at it the other way, right? Like, okay, this is, $100 a month. What would the compounding be on
mm.
that over? He's looking at it a decade out, right? And what's the
Wow.
compound at whatever he's got it in his,
Yeah.
whatever his investments are generating. And so it really is exactly what you said. It's a total mind shift. And
Mhm.
I don't know if you were on the same call I was on yesterday about 2026 predictions, but the person that was running the call said they actually intentionally put all the subscriptions on a card that they know they're going to cancel at the end of the year. And so basically they cancel the card, and then that way they
Wow.
get notices of all the subscriptions that are failing. And then they're like, don't need that one. Yep, need that one. And they'll put it on a new card.
Wow, I love
So I
that.
I thought that was pretty brilliant.
I
That
love that so much,
like it's
because
basically
really
forced discipline, right? It's exactly what
it's
yours is,
forced
forced
discipline.
discipline. Yeah. Yeah. And I'm like you, like we've joked and driven, right? There's a bunch of us where we're like, we need a support group for, all the, just subscriptions that we're, wasting money on, because it is like
Yeah.
and especially like I'm a procrastinator, and so like I'll get something. I'm like, well, I didn't have time to use it this month, but next month I'll get
Yes.
to, the next thing you know, you're 3 or 6 months in paying $50 a month for something you've only touched
Oh my
once.
gosh, it's so
So
bad. I
yeah.
I I really I love the subscription conversation because it's something that every single one of us can do immediately.
Mhm.
Block off 30 minutes by the end of the year, or an hour, block off 60 minutes on your calendar before the end of the year. Have you sit down with you and your partner, have them do the personal, you do the professional subscriptions that
Yeah.
you've got, and cancel it. And here's another question, that we can consider as we evaluate, like, what's the criteria that allows for us to maintain a subscription? And
Mhm.
the I got rid of my Netflix account a year or two ago, and I love not having that. It's just it's the elimination of temptation for a lifestyle I do not want to have.
That's
But having the subscription, it's tempting.
yeah, that's yeah, speaking as someone who has Netflix, Hulu, Apple, like I've got, again, too many of those too, but
Yeah,
that's like I've and Costa knows this work, right? I work a lot. And so
yeah.
that's my veg, that's just the veg out. Like I just want to be able to hop around and be like, okay, yeah, that looks good. Watch that. Right. I don't want to be like, oh, I can't watch it because it's on Paramount. I don't have Paramount subscription. Right.
Yes.
So,
Well, and
so,
then
so that's how I rationalize that anyway.
yeah.
but,
But
but,
everyone needs something that's life-giving, we were
yeah,
talking about Hallmark beforehand. I love a good Hallmark movie, and, I have the YouTube Premium subscription, so I'll watch, like, the cheap ones there that aren't very good quality, and so I'm like, they don't lure me enough to do it very often, but it's my little reprieve at Christmas.
yeah. And going back to what you were talking about, just the credit card review, the subscription review, the
Mm,
great thing about ChatGPT and AI is you can just so easily go and download your credit card statements or, export them as CSVs, throw them into ChatGPT and say, hey, tell me, right, you can basically ask it, right, where am I spending the most money or what am I wasting money on? Of course, you can do that
good.
with QuickBooks or Quicken if you're using any of those platforms. But I have
So good.
played around, with AI, just having it do things like the
Mm,
I think we're fast approaching a place where I'm not sure how Quicken, QuickBooks, like how that like I just think we're going to have this uh,
mm,
completely customized software. You know what I mean? And again, that was tied into the call that I was on yesterday. But basically, we're going to a place where the cost of software development is going to essentially be zero.
mm.
And so you kind of have to think through what that means for all of these platforms, the traditional way that we've
Right.
purchased software. And that's what I've spent a lot of time and had a lot of conversations with our tax attorneys and our partner CPAs about what that looks like for them in the next 3 to 5 years.
Mm,
Because just in the last year, there's been a tremendous amount of progress on, if you've got an AI that's properly trained up on your strategies. And I've got
yes.
a whole, I've got a whole software repository that's got all the IRS code in it, with an AI
Yeah.
agent there. Yeah, there's just so much cool stuff coming. It's amazing.
So
So
good. I'm so grateful for that reminder too, because and at the end of the day, it comes back to what is your mindset around money and the management of it. I think, Matt, for so many of us, as we're thinking about what's coming down the road, what's going to be possible, it's the same thing. We're going to be able to use those tools to the degree that we have a value around money, that around building wealth and around our own responsibility for our part in it. There's I think that
mhm.
that's really important for us to consider. Um,
Well, I
I've
think,
seen.
yeah,
Yeah, go ahead.
you go back to the intentionality part that you mentioned earlier, and that
Mm,
that seems to be the recurring theme in it, and you can apply it to marketing too, right? It's like you have so many people that are doing digital marketing and they haven't really done the math, right, to figure out,
mm,
okay, I need, my conversion ratio on a meeting is this and my show rate is this, and
yeah.
it takes me this many form fills to get a meeting. And that's what, when I'm working with our different advisors,
Mm,
that's the very first thing I talk to them about is like, you've got to be intentional. You've got to do the math to figure out,
mhm,
what is it going to take to get this end result that you desire. And
right.
it's the same thing for the finances, right? If you don't have some sort of plan,
Mm,
a goal of where you want to get to, or like you say, your, asset allocation or what you want to leave to your kids, whatever those
yes.
goals are, if you haven't, you know, talked about them at all or thought about them, right, then obviously
Mm,
you're just kind of adrift, and you're
mhm.
going to be subject to whatever happens in the market. So,
And Matt,
or whatever happens.
you're doing a retreat with one of your clients where you're doing that with them, is that correct?
Well, we're doing more planning. It's just more the business strategy planning, marketing efforts,
Yeah.
things like that for the new year. But it is, yes, I mean, it's an intentional, right here's what we're going to map out for the year here, right here are the events we're doing. I mean, we've already got some of them roughed in already for the first of the year,
Mhm.
but we'll build out the rest of the year. And yeah, I mean, I think honestly, all of life comes down to focus, right? When you think
Mm,
about, success in relationships is, are you focused? Are
yeah.
you in the present? Right? Are you
Mhm.
actively paying attention to whatever is happening in the now? And it's the same
Mm,
thing with business, right? Are you focused, like business is basically math, it's numbers. So
yes.
are you focused on the numbers? Have you done, the homework?
Yeah.
So yeah, I think that's, if
I
there's a
love
single takeaway, that's it. Intentionality and focus.
I love that point, and even as you were saying, effectively, like, living awake and living present. We think about when people talk about swiping, swipe right, swipe left, you think of, like, the dating apps, but there's something about mindlessly swiping the credit card,
Yep.
that I actually think would be really helpful, like mindfulness over our finances, just like how we need to be mindful over our emotions, our relationships, being so intentional with, is this actually, am I just getting more stuff? Is this just satiating a temporary need that I have? Is this actually, something that I really, how is this how I want to live?
Mhm.
Is this who I want to be? So I would love for the pairing of those two in order to be intentional and be focused, asking those questions as we analyze honestly our financial life.
So you going back to your point about swiping the credit card, right? And
Mm,
the ease, if you will, with which so one of the reasons the IRS created withholding, right? The reason they withhold ahead of time on your paycheck is imagine if it were the other way and you literally had to write a check for that. Like people would just be up in arms, right? But
yes.
the fact that it's being withheld on the front side, you don't miss it as much, right? Like it's just
Mm,
the basic premise is it's not
interesting.
yours, it's theirs. And then people are excited. I'm getting a refund. I'm getting a refund. Well,
You're like, no.
not not really. It's your money, right? Like that was your
Oh
in
my
some
god.
cases, you over withheld, which means like literally you let the government play with your money for no return, right?
Wow. And
But that
that
was the
comes back
core
to
yeah, the core concept
the
with withholding.
gosh, I mean, okay, so I just had this thought while you were talking. This is such a big deal. If we really are not being so careful, like this is ours, like being just so responsible. It's being a good steward. And if we're just kind of handing our money over to them and then getting whoopee about a refund, it's almost like
Mhm.
were we even being a good steward to begin with to give it to them in the first place? So I actually think that that's a good little mirror moment for all of us who have like I got a pretty decent sized return. And
Mhm.
so that's a good mirror for me to be like, was how careful am I being to one, yes, put in the strategies that we're talking about today, doing the work like you're talking about for 2026, but also, man, I clearly failed that I didn't pay the right amount.
Yeah, good point. I mean, but to be fair, the entire system is rigged against us, right? Like, so I mean,
What a good point.
most people come through, public school system. There's zero financial literacy, or very very little,
Mm,
in that. So like the whole, and you'll get this vibe if anybody goes to my website, right? It's like just the whole thing is, in my opinion, corrupt from top to bottom. It's like the government, it has been, all of the tax laws and things have been set up to, essentially take advantage of people, the banks, like the whole, like once you really understand how everything flows, it's like, man, this is a really messed up system. And if you know the rules, you can succeed, right? Like if you understand
yeah.
um, how things actually work. But yeah, it's an uphill battle for just the average rank and file person that's, like you say, got a W-2 job and a family and kids.
Mm,
The deck is definitely stacked against them.
right.
So I wouldn't beat
Right.
yourself up too bad. Not that I'm not saying you're average, but I'm saying that I wouldn't beat yourself up. So
Well, and I appreciate that kind of ending almost like on a grace note. It is confusing and it is hard and it's easier to just put our head in the sand. And so I'm grateful for you coming on here
I
and being so prepared.
in fact, I just put, let me see if I can get the stats without playing the video. I just put a really cool video on my homepage. And here, let me read you the stats on this. It's amazing. So the original tax code, the federal income tax, was
Mhm.
only 272 pages, or excuse me, 272 words in the Gettysburg Address, and then it's going to compare 1300,
Wow.
yeah, 1337 words in the Declaration of Independence, 9337 words in the first tax law. Okay, tax law of 2021
Oh
was
no.
10,000 words. Yeah,
Wow.
so it's grown greatly in complexity. 2024, the IRS received 40 million phone calls. So that gives you an idea
Wow, 40
of
million phone calls.
yeah.
Matt, oh my gosh. So really, I mean, this is it's almost I don't know. I'm thinking I've thought so much about this from the side of I get worked up and excited and passionate about bringing emotional intelligence to families, to kids. You know, man, if
Mhm.
kids learned how to process emotions and then were able to take that with them throughout their entire lives, we would, I think, have a lot fewer adults in therapy. And also,
Mhm.
man, we'd have such healthier relationships. You know, we're not taught how to
Yep.
do emotions, we're not taught how to do relationships. And to your point, we're not taught how to do money, and yet you're dealing with relationships and with money for the rest of your life.
Yeah, so listen to this one. 7.9 billion hours, not million, billion hours spent complying with the tax code. Isn't that
My God.
crazy? That's nine zeros, not 6 zeros, 9 zeros, 7.9 billion hours.
Oh my
So,
God.
yeah, I would say it's pretty complicated.
Very complicated.
Yeah,
Well, I'm grateful for you and grateful infinite wealth
building.
builder.com.
Mhm.
And Matt, you've got strategy sessions that you may be able to squeeze in pending availability and
Just
compatibility
depends,
for
like
the
you
end
say, it
of the
depends on
year.
what they've got going on, but yeah,
Yeah.
we're getting down to the wire, and of course, like you say, the CPAs and attorneys typically like to take holidays, so
Yeah.
they're like
Well,
they're
I
like the rest
messaged
of
a
us, they
friend of
like some
mine.
time off, so,
Right. Yeah, they need Christmas too. I messaged a friend of mine while we were chatting and was like, I think that you should work with Matt because Matt, I'm so grateful for what you're doing. I love the bookkeeping with the addition and integration with CFO.
mhm,
This is just so important, you know, and it really is a question of what are you building for the
yep,
legacy that you want to pass on to your family. And legacy is as much the financial legacy as the relational legacy that you're building, and each one
yep.
requires the intention and the focus. So thank you so much for
Well,
coming
and
on today, and I'm really grateful
yeah,
for you.
going back to your point about the relationships, that is so
Mhm.
important. I just recently met a really, high-end estate attorney here in my backyard, and,
Mm,
like, that's his whole practice. I mean, he's super sharp on the financial and the exit planning and all of that, but
yeah.
he's really a relationship coach. It's what it comes down to,
Mm,
and making sure that the families, are aligned on what the legacy, what
yeah.
the goal is. So, super
So
important.
good. Super
Mhm.
important. And so to that end, you know, y'all, if you haven't taken time to really consider what's the legacy I'm building, um, that's a good question to consider. And I highly recommend you lean into that over the next couple of weeks. And it's a perfect time to do that while you have your family around you, you know, and have conversations around that. And you can even take that high level question of what is the legacy I'm building, put it through ChatGPT and say, would you give me some prompts to help me really uncover
Yeah.
some answers to this. So
Yeah,
wonderful.
and
Matt,
like you
thank
say,
you so much for joining.
now's the time of year, right? This is the
Yeah,
time of year that you wanna be doing that reflection, so,
truly.
pretty
Well, thank you, my friend.